The most market-wise on that front?
It's been a pretty dramatic morning for the Australian dollar. If I just bring up the intraday graph, this is what it looks like, and you can see exactly the effect that we've seen. We're seeing the Aussie dollar now above 92 US cents. That bodes well for the Australian market. We've seen the Aussie dollar rising, and that's good news for international flows into our market. So no doubt that we will see the large end of our market, the big four banks, BHP, Rio Tinto, benefiting from that. On the flip side, though, some of those companies making offshore revenue, like Fox, as well as Brambles and Amcor, these stocks may come under a little bit of pressure, but altogether a good signal for the Australian market. Of course, it's a massive day here domestically. At the moment, the market is pricing in a 62% chance of an interest rate cut in August to 2.5%. But of course, we get two key pieces of data out here domestically. The job numbers will be huge. In May, we saw jobs increasing by 1,100 jobs, and that's after a 45,000 job increase. This month, in June, the consensus is for a flat result. But if we have a look at 2013 so far, we've averaged 20,000 new jobs a month, and that's much higher than the second half of last year, where we were averaging 10,000 jobs a month. One of the things we'll be watching closely is the number of hours worked. This dropped by 0.7% month on month in the last set of numbers, but we'll also get inflation expectations. The June one were at 2.3%, so inflation not being seen as much of a problem there, but it should be a huge day domestically, and that means potential for a big move in the Aussie market as well as the Aussie dollar.
And so will the market move if jobs are weaker and therefore we price in more interest rate cuts? Or, I mean, what are the potential outcomes there for the equity market on the jobs numbers?
If we have a look at our currency, it's moving on the basis of interest rate expectations. So if we do price in a higher chance of a cut, that would be a negative for the Aussie dollar. So we would see the Aussie dollar moving downwards. Recently, we have seen high correlations between the Aussie dollar and the Aussie share market, so we'll be watching that one very closely. Of course, if jobs surprise on the upside, then we could see the opposite, and we could see more strength in the Aussie dollar coming through it as well. So watching that one very closely. So that will be at 11:30 a.m.
And meanwhile, a stock that's doing even better than that, Julia, Link, is recording a near 4% gain early on. Set the scene here with the rare earths pricing, particularly out of Canada.
So I guess if we have a look at Lynas, rare earth prices and the rare earth stocks have been doing very well in terms of Canada. But I guess longer term, the thing here is that we have seen rare earth prices coming down. And in fact, we are seeing prices around the 2010 level when China first started those rare earth export quotas, which drove up prices up so high. So unfortunately, we have seen prices of rare earths coming down overnight, a big move in Canada. So it should be a good day for Lynas today. But if we have a look at the share price over the last 52 weeks, this is what it looks like, and you can see that over the last 52 weeks the shares have more than halved in value. But for today, we should see a pretty good share price performance by Lynas. However, it is coming off a very low base in what's been a very difficult 52 weeks.
Yeah,
those wealth managers, those that kind of area of the market, there's been somewhat of an outperformance with the wealth managers. What do you think is actually driving that? And again, maybe given that jump up in the Australian dollar and how you've talked about the effect on the market, what about that impact?
We have seen the wealth managers doing very well in 2013. In fact, just having a look at some of the performances, we've seen Magellan Financial Group up by a massive 130% in the year to date so far. Platinum is up by 56%. We've seen BT rising 44%. Henderson Group is up by 35%. In fact, if we have a look at this diversified financial space, up by 25% in the year to date. That's compared to the financial sector, which is up by 15%. And if we have a look at what's really driving this, what we are seeing is fund inflows coming back into the picture with these fund managers. We're seeing very high percentages of cash money in cash as well as fixed interest, and of course as bond yields start to rise and bonds prices start to come down, we're seeing some of that money shifting. So that's good news for all those wealth managers. Secondly, over here, superannuation also comes into the picture, where we're expecting to see that superannuation, the guaranteed rate, at 12% over the next 10 years. And thirdly, because we have seen a rather good performance by equity markets, we're seeing performance fees coming back into the picture for fund managers like PT, like Platinum, and like Magellan Financial Group. So these are driving these wealth managers. We have seen a good performance in the week to date, so we may see a bit of a paring back of those very strong gains, but it's been a fantastic 2013 so far for these wealth managers.